This has been a big week for BMNR and Ethereum specifically. On the BMNR front, we had their CFO resigning. We also had an amendment for them to issue more shares. On the Ethereum ecosystem, we had JP Morgan launching their own tokenized money market fund. We had accumulation and adoption across the board. SoFi even launched their stablecoin on Ethereum. We had massive green lights on a regulatory perspective. And we also got some pretty aggressive 2026 price targets for Ethereum and for BMNR. And I'm going to be covering all of that in this week's weekly recap of BMNR and of Ethereum. Without further ado, let's jump right in. If you are new to this series or to this channel, I do weekly recaps on BMNR. I've been doing so since September. Each video is over 30 minutes long on average and covers hundreds of individual data points every single week on BMNR and on Ethereum to speak to the adoption of the ecosystem. And honestly, with the price action of BMNR, it's because of videos like these that I get more confidence that I'm actually holding something that, regardless of the price action, I believe will appreciate over the course of 2026 and beyond. And all that to say, if you do enjoy this content, consider subscribing to the channel for more and sharing this out with others so that they may also find out about this content. BMNR had a big day on Friday, up 11%. But if you look on a weekly view, they're pretty flat, down about 3%, because the whole week going into Friday was a drawdown. They were down about 13% as of the close on Thursday, and then they recovered on Friday, and they ended up the week down 3%. If you look on a monthly view, BMNR is pretty flat, only up 6%. And of course, on a 3-month view, it looks horrible. It's down 45% from where we were trading at in the 50s and 60s. So it's been hit pretty hard. And of course, the price of Ethereum has been hit pretty hard. But what's been going on behind the scenes is a lot of accumulation. So let's start off there, first and foremost, at the accumulation point, and then we'll jump into some of the other topics. Ethereum exchange supply hits the lowest level since 2016. I've been talking about this every single week, and it keeps going lower and lower and lower. And now we're at levels that haven't been seen before since 2016, almost a decade since those levels have been hit. This is another chart showing the same thing. You can see the price of Ethereum and the exchange supply ratio. So this is basically the Ethereum that is available on the exchanges. Of course, many people buy Ethereum and they stake it, so they lock it up and it goes off of the exchanges. It's worth noting that the last time the exchange supply ratio was this low, Ethereum's price was under 1.5 thousand per ETH. And right now it's double that, and the reserves are again that low. We can see that institutional holdings have gone vertical here. So you can see the Ethereum to USD on Coinbase here is the stock price. And then here you can see the ETFs in green and the Ethereum treasuries in orange and the total ETH in blue. So institutions adopting Ethereum on a much bigger scale. This is what we've been talking about weekly, week in and week out. Pivoting over to Bitcoin, this is a chart showing the net position change with wallets that have 100 to 1,000 Bitcoin in the wallet. You can see it in orange here. And as the price of Bitcoin rises, we saw the steepest incline here this last week that we've seen in Bitcoin since 2012. So generally you have pretty gradual declines as the price goes up. You have a lot of people taking profits, but here we saw the steepest incline that we've seen in over 13 years since 2012. We saw this, DBS Bank has $500 million on Ethereum. On-chain data shows Singapore's largest bank, DBS, received 2,000 Ethereum, about $6.2 million from Galaxy Digital. DBS now holds 158,000 ETH, which is about $500 million, and 7,800 Bitcoin, which is about $700 million in their wallets. And it's interesting, right? Because we talk every single week about institutional accumulation. We talk about international adoption. It's becoming quite normalized for banks to hold cryptocurrency on their balance sheet. Not only that, but we saw also news from Binance this week where they actually staked $500 million worth of Ethereum this week. So if Binance is going into staking all of this Ethereum, all of that Ethereum is not going to be available on exchanges, and Binance will be collecting some passive rewards from that, generally around 3%. But this is also why this chart is so low here, because you have these institutions that are buying Ethereum and then going ahead and staking it for the long term, and that Ethereum goes off of the exchanges. Let's move on now to some adoption. Here we saw MasterCard advances blockchain innovation through a strategic alliance in the Middle East region. You saw MasterCard partnering up with Abu Dhabi's ADI Foundation to boost blockchain in the Middle East. They're pivoting to stablecoin payments, settlement for cross-border transactions, stablecoin linked cards, and tokenized assets. Keep in mind that ADI is backed by Abu Dhabi. It's built on Ethereum, and they're targeting 1 billion users by 2030 in just 5 years from now. So this partnership is a big deal. And of course, it's all built on Ethereum. Here's another adoption point on the Bitcoin side of things. 14 of the top 25 banks in the US are building Bitcoin products for their customers. So here you can see the name of the bank, the rank, and also the phase where they're in with regards to the Bitcoin products that they're offering. So 14 out of the top 25 are offering some type of Bitcoin product for their customers. And of course, all of that is as a result of the demand that they have from their customers for these products. They wouldn't be building these products if there was no demand from their customers on the other side. Here you have the CEO of SoFi, Anthony Noto, talking about blockchain, with SoFi USD combining regulatory and operational strength as a national bank with the efficiency of on-chain settlement, safer, faster, and built for scale. Of course, this is reacting to the post by SoFi on Thursday, which announced SoFi USD, a fully reserved stablecoin issued by SoFi Bank that positions a company as a stablecoin infrastructure provider for other banks and fintechs and enterprise platforms. Anthony Noto was asked on a podcast on Wednesday, and he did confirm that this is going to be built on Ethereum, but they want to make this open for other institutions as well to essentially white label the stablecoin process so that it can be plug and play for other institutions. So absolutely very bullish because SoFi is a nationally chartered bank. And speaking of, JP Morgan has moved its tokenized dollar deposits to Base blockchain. And here you can see Ethereum and Base now settle 180 billion in raw stablecoin volume every single day. Even if you aggressively strip out the noise and MEV, it's around $40 billion of organic daily settlement. For context, that's comparable in scale to Visa's daily payment volume. And this should be absolutely illegal for it to be all the same color because I can't show you which one Base is. But Ethereum is the highest one of that chart. There was also this post. Hunter here posted that Robinhood is deploying 500 new tokenized stocks on Arbitrum overnight. And Vlad Tenev, the CEO of Robinhood, posted slowly, then all at once. Of course, we know Robinhood is going all in on tokenization. We've talked about this in previous weeks and how this could shape out, especially since there's a lot of movement on the tokenization front for the entire global financial system to be tokenized and on-chain, and Robinhood is one of the institutions that's leading that charge. Fintech giant Klarna will allow users to hold Ethereum in-app soon, and in fact, we had a post by Klarna here on Friday saying Klarna is adding USDC-denominated funding via Coinbase, tapping into a brand new pool of institutional investors, a major step towards a more diversified, digitally powered funding model, treasury evolution in progress. This is Klarna's official account posting here on Friday, and then Coinbase Institutional reposted saying, excited to see Klarna plan to leverage USDC through Coinbase's infrastructure to access new institutional funding opportunities. Another milestone for integrating stablecoins into traditional finance. So you're starting to see a theme here with regards to stablecoin adoption, with regards to tokenization, with regards to institutional adoption of Ethereum in general. From an ecosystem perspective, Ethereum scale is going as intended. And here you can see the Fusaka upgrade at the very end of this chart here and the spike in the target blob count. Of course, more blob capacity equals cheaper rollout through more Ethereum burn through blob fees. Burn starts to matter at market scale. $13 billion worth of Ethereum has been burnt since EIP 1559. As blob usage scales, Joseph here posts, burn pressure compounds. Ethereum scales by design. So in simple language saying, as we have more adoption, you're going to have more scale of Ethereum, and this is built into the system naturally. Here you can see total revenue generated through lending operations, and Ethereum is by far the biggest. Nearly 90% of crypto lending revenue now comes from Ethereum and its layer 2 network per the Ethereum Foundation. There's a bunch of tools out there where you can see these charts updating dynamically. These are just little snapshots. Okay, let's move now to the JP Morgan news because I think it's very relevant and it's one of the biggest pieces of news that we had this week. JP Morgan here, the world's largest bank by market cap per Wall Street Journal, announced that they're launching their first ever tokenized money market fund, MONY, on Ethereum. The firm is seeding the fund with $100 million of its own capital before opening up to outside investors on Tuesday. This is the official Ethereum account reposting this, and this is, of course, an article from the Wall Street Journal highlighting that JP Morgan is stepping further into crypto with its own tokenized money fund. The new private fund will run on the Ethereum blockchain and will be available to qualified investors. JP Morgan's $4 trillion asset management arm, it's going to put $100 million of its own capital and it's going to open it up to investors on Tuesday. This should be opened as we speak. So tokenization is a big theme here. This is the biggest bank in the world. It's something that will allow investors to earn interest on their money, and it's going to happen on the blockchain for faster settlement and transaction speeds. Traditional financial institutions, if they want to be on chain to leverage those benefits, are going to be adopting Ethereum. That is the blockchain of choice by Wall Street. Here, this user expands a little bit. The fund called My On-Chain Net Yield Fund, MONY, looks like a normal money market fund that holds assets designed to preserve capital and stay liquid. How it operates is a little bit different. Shares are issued and tracked on Ethereum using JP Morgan's platform. That then lets the fund settle faster, issue and redeem shares continuously, and move ownership without waiting on traditional clearing systems. The product is open only to large investors. I mean, for now, but eventually there's going to be more products like this open to regular investors. Individuals with at least $5 million in investments and institutions with $25 million with a $1 million minimum. For investors, the risk profile and purpose are familiar. For JP Morgan, it means faster cash movement and tighter integration with treasury and collateral systems. Large asset managers are starting by moving the safest, most conservative products on-chain first, because that's where efficiency gains show up immediately. Adoption is accelerating. So let's look at JP Morgan as a case study, right? This is the world's biggest bank. I mean, they have now their money market fund on Ethereum for their institutional investors, for their high net worth individuals. They have their tokenized deposits on Base, which is of course an Ethereum L2, as we know. The entire traditional financial system is eventually going to be moving over to the blockchain. And what I thought when I saw this news was, imagine what signal that sends to the rest of the market when you have the largest traditional financial institution in the world moving into the blockchain. It gives permission to all of these other financial institutions to do the same. And there's going to be a lot of use cases here, from institutional clients' need for payments, for collateral, for margin settlement. It's all going to be happening on public blockchains. And that, I think, is going to be very exciting. And here's a clip from Jamie Dimon, the CEO of JP Morgan, talking a little bit about Ethereum here. And I think it's kind of funny, right? Because Jamie Dimon was always negative on blockchain and on crypto. He called Bitcoin a pet rock. And he's done a complete 180 now in the last several years. And I don't think it's because he himself has seen the light. I think it's just because there's an overwhelming demand for their clients, for these products, for this technological shift. And if JP Morgan doesn't adopt and lean into it, then they will lose those clients to somebody who does. Let's take a listen to what Jamie Dimon has to say.
Blockchain is real. It's been around for quite a while, but now it's becoming more effective, more efficient, because people are finding ways to do it faster and cheaper, permissioned or not permissioned. Smart contracts, I think, will probably be real.
Blockchain is real. Smart contracts probably be real. Of course, he's talking about Ethereum there. And again, he's talking here about the feature benefits that these technologies provide. And he wouldn't be doing that if there wasn't an overwhelming demand for these products. So here you had Tom Lee reacting to this post, with JP Morgan stepping further with their tokenized money fund. Tom Lee said Ethereum is the future of finance, further evidenced by JP Morgan launching its own tokenized fund on Ethereum. Point blank, I mean, Tom Lee has said multiple times that Ethereum is going to be the blockchain of Wall Street, and this is just proving it out. Let's move over now to some regulation, because there was a lot of news around regulation specifically. We had the US Senate confirm pro-Bitcoin and pro-crypto Michael Selig as chairman of the CFTC. Of course, the CFTC also just announced the new government-backed Bitcoin and crypto trading platform. I'm going to play this clip. It's about a minute long. It's very interesting.
Crypto goes mainstream. The Commodities Futures Trading Commission announcing the launch of the first government-supervised crypto trading platform. It allows Americans to instantly buy, sell, and finance digital assets. Fox Business's Darren Botello.
Of course, right now, as we all know, you can buy and sell crypto online already. But this is the first time, like you said, a spot trading platform is getting the full backing of the federal government. So why does this even matter to investors, that the CFTC is backing this new Bitnomial platform? These other platforms are legally operating, but here's the catch, Maria. They're often called the Wild West. Basically, it's buyer beware. We've seen this with the collapse of FTX and customers eventually losing out on huge profits they would have had. Their money stayed safe in the market, they would have had it. Now with this Bitnomial platform, there are stricter standards for transparency, security, and consumer protection to prevent an FTX-style collapse. We spoke exclusively with acting CFTC Chairman Caroline Pham ahead of this new platform going live.
Not only do we want Americans to come back home and to be trading here where they know that they have the protections that they deserve, but again, that means that American companies that are involved in the crypto industry, they're going to want to build here. They're going to want to invest here. They're going to want to hire here. So this is overall a net benefit to the economy.
And Bitnomial tells us ahead of their announcement, the actual launch of the platform is set for next week. Maria?
launch of the platform is set for next week. So now think about this, with the CFTC announcing their own government-regulated digital asset platform and the Senate now confirming the new pro-Bitcoin, pro-crypto chairman of the CFTC, how fast will that move? How much adoption will there be? How many regulatory hurdles will be overcome through this setup in 2026? That is going to continue to accelerate even further. Here we had the OCC giving banks green light to engage in riskless principal crypto transactions. This is, of course, from December 9th. We're just bringing it up as a refresher. This was a good thread around why this is important. So this user highlights in a thread here, as a result of this OCC decision, banks can now legally be allowed to intermediate crypto trades. U.S. national banks can buy and sell crypto on behalf of clients without holding market risk. This removes one of the biggest regulatory bottlenecks. Until now, banks avoided crypto due to unclear rules. The OCC clarification gives them explicit permission, reducing compliance fear. Institutional liquidity got closer. Banks acting as intermediaries would lead to easier access for institutions, funds, corporations, and high net worth individuals to enter crypto. It strengthens regulated on-ramps and off-ramps. It's a step towards this traditional finance crypto integration. It normalizes crypto in the eyes of legislators. We also saw this earlier this week. We've reached the final legislative week for 2025. We're definitely not going to see the Senate Banking Committee passing any crypto market structure bill in 2025. That's going to be punted to 2026. We saw this. The FDIC approves proposal to establish the Genius Act application procedures for FDIC supervised institutions seeking to issue payment stablecoins. This is as of December 16th, earlier this week on Tuesday, where basically the Genius Act allows insured depository institutions to issue payment stablecoins through a subsidiary and to engage in certain related activities. And Anthony Noto was also talking about this, the implications of the Genius Act on SoFi, who just released their own stablecoin this week. The proposal is basically allowing banks to apply to issue their own stablecoins, and this is expected to accelerate even further in 2026. The Federal Reserve officially withdrew the 2023 guidance that constrained uninsured banks from engaging in Bitcoin and crypto-related activity. We also saw this post here from David Sachs, who said, had a great call today with Chairman Tim Scott and John Boozman, who confirmed that a markup for Clarity is coming in January. Thanks to their leadership, as well as French Hill and Glenn Thompson in the House, we're closer than ever to passing a landmark crypto market infrastructure legislation that President Trump has called for. We look forward to finishing the job in January. So here, basically, David Sachs is signaling that January 2026 is when we're formally going to have this pass. After years of talk, the Clarity Act has now a real path forward. The White House and key senators have finally agreed to move the bill, and they've put an actual date on it. January 2026 is when the Senate plans to formally debate it, amend it, and try to push it towards becoming law. If it does get through, it would finally set clear U.S. rules for tokens, exchanges, DeFi, and on-chain markets, something the industry has been waiting on for years. And of course, in his post, as David Sachs called it, it's going to be a landmark crypto market structure legislation. This is the bill that Wall Street, as well as institutions and builders in the DeFi ecosystem, have all been waiting for. This is the green light from a regulatory perspective, and we just had some confirmation that it's coming in January. This is also a note here from the Blockchain Association and major crypto firms to the US Senate not to restrict stablecoin rewards. This note calls them distinct from interest and critical for competition. This was on December 18th, and you can see that this is addressed to the US Senate Committee on Banking, Housing, and Urban Affairs, Elizabeth Warren and Tim Scott from these institutions here. They're going to be talking about stablecoin rewards as a part of the stablecoin regulation as a whole. And we're definitely going to get more regulation on that in January as well. Here's a video by U.S. Treasury Secretary Scott Bessent, who is talking about the regulatory hurdles being alleviated. Let's give it a listen.
We will take a close look at regulatory impediments to blockchain, stablecoins, and new payment systems. And we will consider reforms to unleash the awesome power of the American capital market. Americans deserve a financial services industry that works for all Americans, including and especially Main Street.
So I can't remember whether I played that video or not last week, but it should be a good primer going into 2026 around the stance that this administration has towards cryptocurrency in general. And from a regulatory perspective, they're going to be clearing up every single hurdle that you can think of to make sure that the US is leading in blockchain technologies innovation. And this is really the first year where we've had all of those different major players aligned towards a common goal. We had, of course, the retail investor and the companies that are building on the DeFi ecosystem. But now this year, we also have institutional adoption and regulatory support from the administration. So all the pieces are in place, and that position is only going to get strengthened in 2026. Let's move on now to just a few technical posts before we talk about BMNR specifically. So here we can see that since 2018, Ethereum has turned every dip into a higher low. As you can see here, Ethereum has just made higher and higher lows on a multi-year view, and this time it's probably not going to be any different. Here you can see this inverse head and shoulders. James here says, I don't understand how anybody can be bearish, where Ethereum is essentially turning a corner and will climb higher from here in 2026. James again here says the 14-day relative strength index is on the floor for Ethereum. And you can see that in previous times where that's happened, it's signaled a bottom for Ethereum from a technical perspective. Okay, let's talk now about some BMNR. One of the biggest fans of BMNR, aside from myself, is apparently Cathie Wood, because she is buying up every share in sight. So here on Monday, she bought up a ton of BMNR, over 550,000 shares across all of her accounts. And then a few days later, on Wednesday, December 17th, she bought up more. She bought up about 360,000 shares across all of her accounts. Cathie Wood has been vocal about BMNR and about the Ethereum ecosystem being where the money is. And she's been selling Tesla, among other positions, to be funding BMNR, going in very heavily. Of course, we had news this week that the BMNR CFO resigned. The agreement and the separation agreement, which they have to file with the SEC, said that there was no real arguments here. So here it says, under the separation agreement, the parties agree that Mr. Mo's employment will terminate without cause, effective January 16th, 2026. Interestingly enough, this is one day after the investor day for BMNR. So I wonder if we're going to get some news there around a new CFO or what that is going to look like. So we don't necessarily know why the CFO walked away. Whether he was fired or whether he quit or anything in between. There's no real color here that is provided. I mean, this is the only line here. Mr. Mo provided notice of his resignation from his position as Chief Financial Officer, effective as of the separation date. Mr. Mao's resignation is not related to a disagreement with the company on any matter relating to the company's operations, policies, or practices. The board thanks him for distinguished service and valuable contributions. So that's very boilerplate legalese. That doesn't provide a lot of color for us. So here we can see the separation agreement. It highlights the lump sum payments that are going to be made to the CFO, but there was nothing that I could find that's really earth-shattering here. It seems pretty standard. And BMNR has had a couple of leadership changes over the past couple of months. They've had a new CEO, they've had a new advisor, and Tom DeMark, of course, bringing on Tom Lee as the chairman. And so I think a lot of this is just normal. I'm not reading too much into it. We saw Tom Lee here and Ethereum being highlighted on Cantor Fitzgerald's website. This is, of course, Howard Lutnick's company, and Howard Lutnick is a part of the administration. Cantor is a Wall Street primary dealer that trades directly with the Fed. Them hosting Tom and bitmine is serious institutional validation. And this is just up front and center on their website here. We also had another filing this week. This is BMNR Bulls, saying bitmine filed a charter amendment in Delaware effective January 1st, 2026. It expands authorized capital stock, a move typically made ahead of strategic balance sheet actions, not at random. These amendments don't create dilution by themselves, they create optionality. You do this when you're planning for long-term treasury strategy, structuring future capital, not reacting to stress, positioning ahead of growth initiatives. Watch the actions, not the headlines. So essentially here, they're massively increasing its authorized shares from 500 million to 50 billion. It gives them the company more room to raise money if they needed to, or to make acquisitions, or even reward employees through the shares that they allocate for performance. It's a big dilution risk, of course, if they use it aggressively, but it just gives them the buffer to increase authorized shares from 500 million to 50 billion. That's a crazy amount. I don't think I've ever seen that before. I don't think that they're going to go all the way to that 50 billion, but they are just getting authorization here. This is Roy here, who says, I'm seeing a lot of questions on this. Effectively, the NASDAQ has been considering limiting companies from being able to buy cryptocurrency and hold it on their balance sheet without a shareholder vote. In effect, this would give bitmine all the shares they ever need. They won't have to do additional authorizations ever, because 50 billion is a massive amount. Should they join the NASDAQ at some point, or other exchanges begin to pass similar rulings, which would not surprise me. If you don't like the idea of dilution, I understand, but then BMNR is not the play for you. And the way they're doing this is at least so far not dilutive, since they're buying Ethereum undervalued relative to their MNAV. I think that's the salient point there, is that BMNR is purchasing Ethereum, and they're doing so every week consistently. And if they dilute even further, then of course that's not great for existing shareholders, but the value is going to be heavily correlated to the underlying value of their Ethereum. So it gives them optionality. Right now, we don't know necessarily what they're going to do, whether they plan on expanding that more or not. But right now, they're just looking for authorization. So it seems to be a preemptive move. As they get more authorization, it's going to allow them to dilute more, to accumulate more Ethereum. And of course, we know what the strategy is there with regards to accumulating 5% and then staking afterwards. Here you have a post. BitMine bought 3.2% of Ethereum's total supply for $12.46 billion and announced they're going to 5%. Tom Lee's firm is absorbing 138,000 ETH weekly during peak bearishness. No institution has ever openly targeted 5% of the top 2 crypto. Ethereum exchange reserves at 8.84%, all-time low. They're telling you the price discovery has not started. And this makes sense, right? Because you have these institutions that are buying heavily at the bottom, and sentiment can change on the drop of a dime. It's very fickle. BMNR has more than 60 million shares of stock traded on Friday. This was a couple of days ago on the 18th. 30th most of any stock. The 2x single stock bitmine ETF are also getting some volume, with BMNU having 40 million shares traded on Friday, and BMNG having 6.3 million shares traded on. So this is a very liquid stock. It's trading hands a lot. The option chain pricing is very lucrative as well. And it all goes to show the accumulation for BMNR. BitMine has completed roughly 66% of its goal to acquire 5% of the total ETH supply. It's a measured move, disclosed accumulation. As we know, they announce every single week on Monday how much they bought that week. But here you can see how quickly they've accumulated. On July 14th, they only had 163,000 ETH, and every single week they continue to accumulate more. And right now they have about 3.9 million ETH. And when they report on Monday, it's going to be over 4 million ETH. No selling, no reversals, just steady accumulation every single week, going to that 5%, which they're going to be hitting in 2026. Finally, let me talk a little bit about 2026. Tom Lee's Fundstrat stated in their 2026 cryptocurrency strategy advice to internal clients that a significant correction is expected in the first half of the year, completely contradicting Tom Lee's public statements. Although I don't think he necessarily is contradicting himself, because he also did an interview highlighting as much. The internal report sets target prices for Bitcoin 60,000 to 65,000 and Ethereum 1,800 to 2,000, with Solana at $50 to $75. This comes just moments after Tom Lee stated at Binance Week that Ethereum 3,000 is severely undervalued. He previously predicted Ethereum would reach 15,000 by the end of 2025. So this is a little bit of a hit piece. I mean, I think both things can be true at the same time. Ethereum could be undervalued at 3,000, and it could even go lower than that. So here you can see the head of digital strategy at Fundstrat highlighting the base case is a meaningful drawdown in the first half of 26, with Bitcoin falling to 60,000 and Ethereum at 1,800 to 2,000. This, of course, would be horrible for BitMine because BitMine would likely be trading at $20 or lower if this were to be the case. So here, BMNR MNAV tracker asks, does this mean the buys are going to get small again? Because as we know, they're working with Tom DeMark, this market timer. And if they believe that Ethereum is going to have a big drawdown in the first half of 26, it would make sense to reduce the purchases now to buy more when it falls lower, right? Here's Tom Lee talking about the market in 2026 around the volatility of the market. And I think this is going to make more sense relative to the article that you just saw around them expecting a drawdown in 2026. Let's give it a listen.
I mean, I think 2026 could look like this year, because this year had a bear market and then a bull market. Next year, there was 2 puts. There's the White House put still in play, and the Fed put, I think, is going to come back. People sort of forgot, like, it's been dead for 3 years. It's really going to come back in force.
Let me just pause for a second. Look at Wall Street's S&P 500 targets: 7,100, 7,500, 75 to 8,000, 7,800, 8,000. Of course, we're not broken 7,000.
But it will take maybe the first half of the year to get through that, because we don't have a new Fed in the first half. So I think the first half next year could be down 10 to 15%, and then a big recovery.
10 to 15% is what he sees for the first half of the year to be down. If the first half of the year is 10 to 15% on the indices, then a lot of these high beta names will be just killed. And the second half, he expects to see a strong recovery for us to finish off the year 10% higher. I believe his target for the index is 7,700 by the end of 2026, but he thinks we're going to do a round trip on the way there for us to go lower in the first half and then higher in the second half. And I know that's going a little bit counter to what a lot of the Wall Street thinks. A lot of Wall Street thinks we're going to have a very bullish first half of the year in 2026. So even if we have a drawdown in 2026 and we have a higher leg up in the second half of the year, I still think that doesn't break the thesis, because I still think the adoption underlying the accumulation is what really matters, because that will speak to the longevity of the blockchain being around for a longer time. I want to play this clip. This is from the CIO of Bitwise. BMNR Bulls posted this on December 16th on Tuesday. He says that the biggest mistake people are making is assuming that this is already priced in. The market's price in narratives first, infrastructure second, and capital last. And of course, in these weekly recaps, we talk about all three, but we're talking a lot about the capital in the form of accumulation, and we're talking a lot about the adoption in the form of tokenization. And a lot of this stuff is not priced into the market yet. It's definitely not priced into the prices either. This is a podcast here, and this is Matt Hogan talking, the CIO of Bitwise. And I thought what he had to say was incredibly bullish, and I want to leave it as one of the last posts of this video to sort of wrap up the thesis as we wrap up 2025. Let's give this a listen.
I think crypto Twitter has sort of lost its ambition totally. The chairman of the SEC, the most important financial regulator in the US and the world, said all US stocks would be on chain in a couple of years.
Whoa.
For context, the tokenized stock market today is $680 million. US stocks are $68 trillion. I'll save you the math. That's 100,000x bigger. Right? What are we even talking about? I think we've lost sight of how big a deal crypto really is. Because we made this regulatory progress, it's entering this period where we can move the full financial economy on chain. It won't happen overnight, but the chairman of the SEC is telling you it's going to happen in the next couple of years. Right? We're not really bullish enough, I think, is my take.
So there you have it. I mean, look, you're having all of these green lights from a regulatory perspective around adoption. You're having all of these green lights from an institutional perspective with regards to adoption. As we know, for long-term investors, this is what we need because we're invested for years, not just for months and not for weeks. And so you have this very clear validation on the direction on a multi-year trajectory of where this is headed, as dictated by the adoption, as dictated by the institutional awareness and the regulation green lights. And yet, most investors or so-called investors are affected by the short-term price movements. They're affected by the fact that over the past couple of weeks, this thing has been down, or over the past couple of months, this thing has been down. And really, that doesn't matter because you're here to hold for years. At least as a long-term investor, that's the thesis. There's one thing I want to leave you with, and it's this post right here. This is Bitcoin's adoption path. I found this, and I think this was one of the most interesting charts that I saw this week. We're at 3% adoption for Bitcoin in 2025, according to this data by River. That's equivalent to where online banking was in 1996, or where social media was in 2005, or where the internet was in 1990. If you look at this from Bitcoin's perspective, it's even lower from Ethereum's perspective. From a global adoption point of view, Coca-Cola's market cap is bigger than Ethereum, for crying out loud. If you look at the adoption for both of these, Bitcoin and Ethereum, and cryptocurrency holistically, and then you think about what is happening where you're having all of these regulatory bodies, you're having all of these market makers and the biggest ETFs in the world and the CEOs of the biggest financial institutions in the world, all talking about moving the financial world on chain, talking about tokenization, talking about adopting the blockchain for the efficiency benefits that it provides. And if you look at all that, it's very difficult to be bearish. We can discuss the semantics around being bearish for the next week or for the next month. But if we zoom out to the next decade, I just don't see how this is not a winning trade for most investors out there. If they just buy and hold, stake their Ethereum or buy their BMNR or whatever it is, buy their Bitcoin, this is a wave that's going in one direction. And I just think that by being bearish, you're swimming against the current. It's a very short-term mindset to have in front of this freight train of adoption that you're having. And every single week I make these videos, and every single week I look at the price action, and myself, I grow a little bit skeptical, a little bit emotional, because I think to myself, oh man, could I be wrong about my thesis? Is that possible? And then I make these videos and I look at these posts and I look at these news articles and I look at these interviews with these prominent figures in the traditional financial world. And I think to myself, I'm not bullish enough. I'm not nearly bullish enough, because if the stock chart didn't exist and you couldn't see price on a 24-hour basis at the drop of a hat, you would be super excited about the prospects of this industry. And that's, I think, the thing that I want to leave you with is we're wrapping up 2025 and it was a groundbreaking year. It was breakthrough from so many different perspectives. Because like I said before, this was the year where you had institutions fully jump in head first. You had regulators fully jump in head first. You had all of the blessing by the administration. Banks can now engage in crypto activities. You have all of these green shoots. And then you have the price that's not really doing too much. Well, who cares? Because the adoption is front running the price action. And if I woke up tomorrow and I saw Ethereum was at $6,000, yeah, I'd be happy. But at the end of the day, I wouldn't be surprised because that's where I think it should be. And I think it should be higher because I'm looking at all of this news that's happening behind the scenes. So that's the thing that I want to leave you with. I think 2026 is going to be a terrific year. And of course, the big catalyst for us as BMNR investors is going to be in January when we listen to BMNR's annual shareholder day and we find out what they're doing with regards to staking, what Maven is going to look like, whether they can white label their staking solution to other providers. Binance is already staking. We're going to have all of these other ETFs that are going to be staking as well. The supply exchanges are just going to fall lower and lower. And this price will go up because as adoption goes up, the price is also going to go up. As supply goes down, the demand is going to go up. It's only a matter of time. And I could not be more reassured in that fact. And these videos help me to come to those conclusions. And I really appreciate you guys making it possible for me to make videos like this. So I really hope that you drop a like, subscribe to the channel if you're new to these videos, and share this video out with the community on Twitter, because I think more people need to see videos like these to rekindle their enthusiasm and their bullishness around this ecosystem in general. Because if all I saw was the short-term price action and none of this other stuff, I would be skeptical as well. And I would be maybe bearish or maybe wanting to sell my position. But it's because I do this research on a weekly basis that I feel very comfortable with my position through the volatility, because volatility is part of the equation. But over the long term, I'm confident of the direction that this market is going to go in and that this technology adoption wave is going to go in. Thank you so much for watching, and I'll see you in the next one.